whenever I get these deals, I look at them for 60, 90 seconds, and I know if it's a deal or not, and then I move on. Hey everyone, Kevin A. Malsh, Pine Financial Group. We work together so you succeed. You found us here on Facebook, you found us here on YouTube. Please hit like, hit subscribe. We're really trying to build a channel here to help more real estate investors just like you. The best way to do that is to build an audience. So you'd really help us out by hitting subscribe or hitting like, and leave us some comments below. I'd love to hear what you think about the video. Today, I want to talk about analyzing an apartment deal. So some of you may know I'm actively looking for apartment opportunities. I'm looking for somewhere between 20 and 30 units, and I'm really trying to stay in the Denver metro area. And I just got an email today with a couple of opportunities. So instead of going through them like I normally do, I thought, hey, I'll just throw on this quick Zoom call and record it and share with you how exactly I go through this. So let's go through it. I'm gonna do a screen share so you can see the email, what I'm getting. I get deals from brokers, I get deals from other investors occasionally, and I get deals from websites like LoopNet and Crexy. So this specific opportunity, or these two opportunities, as you can see, came from Crexy. And when you sign up on there and you have a little account, totally free, you could set up filters and they'll email you opportunities like this. So I get these two opportunities in here for two multifamilies that supposedly meet my criteria. You see one of them is in Arvada, one of them is in Lakewood. So 42 units and a 17 unit. So I'm just going to go into the 17 unit because it's a little bit closer to what size building I'm looking for. I could look at both of them, but let's just start here. And there's quite a bit of information on the initial website, but I like to download the offering memorandum because that gives you a bit more detail. What's interesting is when you download these offering memorandums, Crexy gets notified. So the listing broker knows that you downloaded it. And sometimes you'll get a call or an email from the broker asking your opinion on it. And it's a great way to connect with them. They called you and then you could open up a conversation exactly what you're looking for. And then they could start sending you other opportunities even before they hit Crexy. So the offer memorandum really has a bunch of pictures at the beginning. Almost all of them are like this. And then as you get near the middle, it's going to go through the numbers. And what I'm looking for in the Denver area is a true 6 cap, which is extremely tough to find. But I'm going to show you what that means. A 6 cap, a cap rate is basically how is the building going to perform if there was no financing involved? So if I just paid cash for it, what could I expect a return on my dollar to be? So looking for a 6% return on my dollar if I was to pay cash. That's kind of what we're talking about when we say cap rate. So this is a 17 unit building, and you can see the mix here: 6 1s, 10 2s, and 1 2 2. That doesn't really matter much unless you're going to start digging more into the diligence. But when I'm going to quickly analyze it, which is what I'm doing right now with you, I don't really care about all that. What I do care about is income and expenses, what they're asking for and what I'm willing to pay. So that's what I'm going to try to find. So I have this little apartment analyzer that I created. Happy to give this to you. If you want to email us, we could just shoot this over to you. All it is a spreadsheet, as you can see, that I just built in some formulas. So email Justina if you want a copy of this, and then she'll just send this over to you. I do want to ask you to please hit like or subscribe before you ask for a free spreadsheet, though, if you don't mind. Okay, so gross scheduled income. This is what is scheduled to come in if you didn't have any vacancies or anything. So if it was 100% occupied, what do you think you would get for rent? So this should show up here, gross rental income. So oftentimes you'll see a pro forma and the actual. So I'm going to run everything off of actual. Okay. So 248,970. So all I do is put that in here, 248,970. Okay, and then other income would be like your RUBS or your reimbursements or your laundry facility or anything like that. So let's see if there's anything else that, so this one has laundry and RUBS in it. Oh, and some miscellaneous. What is this? Pet rent, fees, storage. Okay, fine. So it's 3,600. So I'm going to do equal so I can add all this together. 3,600 plus, what else was there? 12,600 plus 5,230. Okay, so those are all your, I just added, 3,600, 12,600. I added these three numbers together to get my other income. 5% vacancy. This formula is not working. I'll make sure this is fixed before we send it to you. But we're going to take the scheduled rent and multiply that by the vacancy factor, which in this case, I'm using 5%. Now, if you change this percentage, it will change your vacancy estimation. I like using 5% because it seems to be pretty accurate, especially in an environment like we're in today when I'm shooting this video. If the rents get hotter, I might go down to 4 or 3. I think that's a bit aggressive, but if it's slow rents and there's higher vacancies, absolutely. You could see vacancies in some parts of the country, 8, 9, 10%. So try to get an idea of the true vacancy if you can. But I know in this area, 5% is a good number. Okay, so that gives me my effective gross income. And then we just go through the expenses. And I'll say this, I'm going to take the listing broker's word on these expenses with the caveat that I know they're wrong. They always are. So the expenses will be higher than what they're disclosing to you here. But I'm going to use their numbers to make sure it fits somewhere in the realm of what makes sense for me. And if it does, then I'll start digging in quite a bit more. That's when I'll contact the broker, for example. All right, so they got taxes of $20,860. So I'll come down here and say taxes $20,860. Insurance $9,859. So insurance is $5,895. Is that what I said? Close enough. Utilities and trash, 18,000. I'm just going to round 18,100 for utilities. I'm just going to throw it in here, 18,100. And management, I'm gonna leave that out because I know management's going to be around 8%. You could adjust that depending on the number of units. Sometimes you can get as low as 6. So somewhere between 6 and 8 on multifamily is what I would expect in most parts of the country. So I'll calculate my own management, repairs and maintenance. In fact, I will calculate my own repairs and maintenance here as well. And then miscellaneous. So they just have 3342 for miscellaneous. So I'm just going to say other 3342. Okay. Now this gives me pretty much all the information I need except for the listing price, which I'm going to get right down here in their price analysis. So the price, they have it listed at 306. Okay. So let's go through these. I always put in $500 for accounting because the CPA is going to have to do more work and it's going to increase the costs to me to do my taxes. 500 is probably a little high if we're doing a small building like this, but I just always leave that in there. Advertising and leasing, I just do 1%. What I found in all of my portfolio, this is a fairly accurate number. What it costs when you turn over a property, like the leasing agent fee or application fees that you have to absorb, anything like that is about 1%. Gosh, and something like this, you might have 2 units or 3 units turn over in a year. So you can see that's probably pretty close. Insurance we got from the OM. OM is offering memorandum. Taxes we got from the OM. We're trusting that. Legal, this is going to be in case there's evictions or eviction threats. You never see anyone budget for legal, but you will have legal expenses when you're buying apartment buildings. Professional management. So you can see I did 8%. I'm going to leave that here because it's only 17 units. So I think that's going to be the right number. And you could already see that it's higher than what they had estimated. Resident management. This is if you're going to have a much bigger unit, like I'd say over 100. And there's going to be an on-site manager. You'd have to have a separate line item in the budget for that. This is not going to be affected here. Neither is office expenses. Repairs and maintenance, I'm using a 10% number. I think that's probably, a really accurate number. And I think most real estate investors that invest in multifamilies would agree with me. What I do get some pushback on is the reserve to replace. So this is a 1.5% is what number I use. And this is for your air conditionings, your appliances, your roofs, any major item that isn't ordinary maintenance. Now, I don't actually put this money away. I have my own reserve set up, but this is just when I'm running numbers to understand that, hey, there is going to be expenses. And over a long period, it's going to be somewhere around this per year. Okay, now you can see I break out all the utilities, trash, gas, electric, water, sewer, all of this separately, but really most of the time the numbers will be disclosed to you all in one line item like that was here. So you can just put that anywhere you want. And then other. Now, if I get an expense ratio under 40, I know that some of the numbers are wrong. The expense ratio will be higher than 40. So that's just one of my checks and balances here when I'm running through this. So I know that whatever these numbers show, it's going to be a little bit worse, but we're actually pretty close. We're almost at 40%. 45% is actually a much closer number you'll find the more deals you look at. So this is your net operating income, NOI. is going to be about $156,000 on this building. Okay, they have it listed at 3.6, so they're currently selling it at a 4.36 cap. Okay, if I want a 6 cap, I would need to offer $2.6 million. So this building to me is worth $2.6 million. That's what I'm willing to pay. They have it listed at 3.6. So there's $1 million delta here. This is one that I would immediately just move on from. But if you want to continue the spreadsheet, what I built in here was, you put in your interest rate and your loan terms. This is normally 25 years in the apartment world, but based on a 20 or 30, this is a 30% down payment. This is your loan amount. This is how much your payment's going to be every single year. And you can see how I did that. This is an amortization. This is amortized over 25 years. That's what your annual payment was. If you have any second loans that you're taking out, so my cash return, this is how much money is going into my pocket, 40 grand a year, 41. So my cash on cash return, this is an important number for real estate investors. And you could watch some of our other videos on the difference between cap rates and cash on cash. But you could see in this example, if I use a 30% down payment, my cash on cash is actually lower than if I paid all cash for the building. So that's interesting, right? And if I lower my down payment to 20%, that should actually, that went down even further. So you could play with these numbers and see what kind of return you're looking for and how to hit that. But I also calculate, which is what's really cool, I built into the spreadsheet, is what will the loan pay down in that very first year? And then the way amortization schedules work, every year the principal reduction gets more and more and more and more. So I'm only looking at a 1-year return here. So if I have a principal pay down of 32,000 plus, cash return of almost 41,000, my total return in this is going to be 9.3%. So my return on my money is 9.3 if I'm paying what I want to pay, which is the 2.6. So that's how I use this. It gives me my monthly payment, my debt service coverage ratio, so if you can qualify for the loan. That's how I use this spreadsheet and how I run through a deal extremely fast. Now, the 9% return, I should point out, does not include any appreciation on the building or depreciation for tax benefits. It's only accounting for the things I can count on, which is the cash and the loan pay down. So if I go back to my email here, so we know this one's not worth our time, right? I mean, I'm going pretty slow, but it doesn't take you that long to analyze a deal. So I could just open this other one. This deal is in Arvada, and same thing. I'll just go to the OM, and I'm not going to go through the whole thing again with you, but just to give you an idea, you could see that these offering memorandums are, for the most part, all set up the same way. That's cool. It gives a little floor plan, and then you'll have the numbers pull up at some point. And here they are. So it's the same kind of thing. So that's analyzing a deal in maybe 60 seconds or 90 seconds or something like that. Whether it's worth spending any time on or not. If you are going to spend more time on it, then you start verifying rent amounts, you start verifying taxes, insurance, and some of those expenses. And then you contact the broker and have them send over some more diligence documents. Maybe you want to see the actual financials or how they're coming up with their pro forma. And then you could work with them to write the offer. Hopefully you found this video helpful. I just realized that I'm not going to invest in that one. I'll take it once I push stop on the record. I'll look at this one, see if it's worth any of the time. But yeah, whenever I get these deals, I look at them for 60, 90 seconds, and I know if it's a deal or not, and then I move on. Hopefully you enjoyed the video. Leave me some comments and be sure to check us out, pinefinancialgroup.com.